In this video, we're going to review the indexes because the market has made some very significant points of interest today, and I wanted to point them out to you and show you what we're anticipating and what we can expect from this point forward, technically speaking. And so let's go through, and the first thing I want to do is just point out on the chart right now, we're looking at the Dow. And as we've talked about in the past, the Dow, the Qs, or the NASDAQ, and the S&P 500, and even the Russell 2000 all kind of travel in basically the same pattern. So we only need to review one of them, and it kind of applies to all of them. So this is the Dow, this is the S&P. Flip over, you can see I've got a couple little trend lines drawn in here for us on the S&P. And if you go back and look at the previous S&P video that we looked at, we're going to follow up on that, all right? So this is kind of a continuation of the conversation we've been having about the overall financial markets and how it applies to how we're going to move forward, taking individual stock positions based on what the overall market's doing. So let's go in, and this is the Qs. And so I've got a couple of trend lines drawn in for us here in the Qs. And what we've done is we're just going to come back and quickly review what we talked about before, is that we had our three drive pattern down. We got all excited thinking that the market was going to break and go higher here and then break and rally here. It failed to do that, right? So we came in with another three drive pattern down. And this is where we were looking back in time and looking back in history, and we're saying, hey, wait a second. We got some very serious numbers back in here, and we're just going to draw those in here. Back when the market started to rally big off of the coronavirus, right? So we got right in here. We got a couple of these spots in here that are very important to us. So I'm going to draw some horizontal lines. We're going to bring those back across and look at where we're at right now in the market. And as you can see, we fell below some of those areas. And so we're down here kind of with the three drive down on the Elliott Wave pattern, looking for a reversal. Now this would be an A, B, C, D pattern on the long-term trend, right? So if we came in here just with a long-term A, B, C, or 1, 2, 3 pattern, I'm just going to draw that in here. This would be 1, 2, 3, 4, just like that, or A, B, C, right? So this would be your E pattern coming up in here. So A, B, C, D on the long-term trend. So that's the reversal pattern, and we oftentimes experience in an Elliott wave. Those of you who have followed my Elliott wave pattern education, you know that we do an X 1, 2, 3, 4, 5, A, B, C. So on the longer term trend, we're now making the ABC, which in this case on the daily chart has been three drives down, a rally, and then three more drives down. Now the question is, are we going to make a full Elliott wave drive down on the retracement? Because we could very well in the long term chart do A, B, C, D, have the E, and then go on down and give us the full Elliott wave three drive pattern, right? So there is the downside potential continuation of this if we go into some additional economic troubles based on, price of crude oil, and I've got that in here as well. Crude oil's been falling. This has a lot to do with the economics of the world. Everything is made, with crude oil. I mean, diesel runs the world, and so we can't have food, we can't have houses, we can't have roads, we can't have anything without crude oil, and with the price of crude oil being astronomically high right now, and it's looking like we're getting an A, B, C pattern in here, there's the possibility that this could be done and start to rally once again, and we get the retracement and an increase in crude oil once again. Now, a lot of analysts are not calling for that retracement. The fundamental analysts are saying, look, we've come into the July or the summertime time frame, and we should see a drop off now. And so that's kind of what happens. In July, we generally have the peak driving season for the 4th of July and for those types of consumption of gasoline and oil, and so we generally see a fall in price after that. Now, some analysts are saying we're going to see a rebound and a rally once again. We'll have to watch again. We'll watch these ABC patterns and see how they turn out. We'll watch a little closer in other videos, but right now I just want to bring that to your attention. We are down here on an ABC pattern. There's a possibility of making a third drive down, or giving us a reversal if it doesn't break that low, start to rally once again, and that will affect very closely will reflect the price of the stock market. So if we come back here and look back at the Qs, we want to realize that we are in the ABC pattern on the way down. So there is the possibility of taking a long position here. Now, a lot of analysts are also saying that, it might be a little bumpy, a little rocky right here in the beginning, but those who pick up some shares right now will be happy by year's end. So there are some possibilities coming in. I've actually been adding a couple of leap options to my portfolio, just some test options in here to get started, to start seeing if we're not going to get a little bit of a rally headed towards the we got the midterm elections coming, and so generally we see a little bit of a rally coming into the positive outlook of what's expected for there, and this could be that turnaround point. Now, the point that I'm making here, technically speaking, is we've got our 3 drives down. You can see we got a nice trend line coming down here. If you remember the last video that we did that was in a review of the markets, we were looking to see if the market was going to hold above this low, right? If you remember, the market was going to hold above that low. If it was going to hold above that low, we were anticipating a reversal and a nice little head and shoulders formation in here. If you remember back, we were looking for that head and shoulders to break in here, and it did. It came in across that trend line. As you can see, if we just line this up a little bit more accurately, we've got our nice little trend line in here, and we broke that trend line. The blue lights are right there from the bulls and bears indicator, and we broke this new high, and this is very positive. This is a bullish reversal trend pattern. Okay, so we are bullish. You can see the bulls and bears has come in with an arrow, which, as you know, arrows from the bulls and bears on the daily chart in the stock market are very rare. And so when you get those, we generally say we do want to take a risk on those. So you can see that we've only had in the last the entire year's period of time, we've only had a couple of those. Coming in here, a little bit up here at the top as that market bounced back and forth. But you can see how rare an arrow is from the bulls and bears, and here we're getting one right as this market reverses and breaks this head and shoulders pattern to the upside. So this is an indication that we can maybe start adding on after the third drive pattern down to some longer positions. It is the A, B, C, D retracement pattern, but we also remember that there is the possibility of a third 3-drive pattern down, giving us that full Elliott wave on the longer term chart. If we come out here to the weekly chart, this is what I want to bring to your attention. If you remember, this is back here. This was the Trump train. Let's draw a little remembrance in here. This was the Trump train. Remember, we were all thinking that was fantastic, how great that is. Oh my gosh. And then we had, what did we have here? We come in here, and this was Corona. And so you can see that the break that we've had here is tremendously large, much larger than the Corona shutdown. And so that's kind of, where we came in. We came in here with the elections. This is where Joe Biden came in. Now, if you remember, just to give you a little history lesson, we pumped $1 trillion into the market. If you remember, Donald Trump proposed, I think it was $400 billion. And the Democrats came back and said, why not do $1 trillion? And the Republicans all jumped on board, and Trump's like, well, I guess, okay, we'll approve $1 trillion. So they put $1 trillion back into the market to make a recovery on that coronavirus. Joe Biden got in, and with his budget ended up putting $10 trillion back into the market, and that's why they're all the analysts you see in the news that we've lost $9 trillion back down. So that's kind of just giving you a little bit of a history of what's going on. But now that's fundamentals. Now let's come in here and look at this from technical standpoint. From a technical standpoint, we got that first drive, then we got drive 2, drive 3, and with that $10 trillion bubble that we popped in there with all that money, we ended up with a 4th drive. Which is rare. You don't generally get 4 drives. If you notice, the Trump train got 3 nice drives in it before we got the retracement. Here's another 4-drive pattern, but now we're getting the A, B, C, or the 2-drive pattern back down. So if we come in with our Elliott wave tool, you can see that this is X, 1, 2, 3, 4, and if there's our 4th drive, generally we stop at the 5th wave. Doesn't mean it can't go 4, 5, 6, certainly can, but statistically speaking, we generally stop at 5. So we're going to just put that 5 up there. Now you can see this is A, B, C, which is where we generally get that retracement, right? So then if we kick in our Fibonacci knowledge, we come in here with the Fibonacci retracement, and this market went up, full retracement, right back to 50% of the last major move. So this thing is riding like a train on rails as far as technical analysis, Fibonacci and Elliott wave strategies are concerned, which a lot of the big boys pay very close attention to. So that's why we paid close attention to it. And so what we're seeing now is we're seeing this indecision area, which is kind of what happens right in here, which is why I say, it might be a little rough coming through here initially before the market picks another direction and either starts to rally once again, or if we get that 3rd drive down coming down off the top. That's the question that we have to ask ourselves. So it'll depend a lot on crude oil, the economy, the elections will have a lot to do with this. So there are a lot of fundamentals, but we do need to watch the setups and triggers from the technicals, because the setups and triggers from the technicals are what gives us the entry points for the fundamental drives. All right, so that's why it's important. All right, so that's just a quick rundown of what we're seeing here on a short-term basis, long-term basis, and what we can anticipate with the setups and triggers as we see them technically speaking here in the indexes.